Welcome back to the Deduction Desk. My name is Joe, this is Sagar, and in this episode we're going to be speaking specifically on everyday deductions, questions that Sagar gets all the time, which are what should I be deducting, what can I deduct, and what can I not deduct. And I think for the sake of time, because there's a lot of categories here, we broke it down into a few different specific categories: professional expenses, office and administration, technology, so you can kind of hone in specifically on where do I work, what avenues are going to be more specific to my business, and what makes the most sense for me.
Yeah.
Obviously typical business expenses from a professional standpoint, from an administrative standpoint, what are ones that stick out to you the most? Like ones that are obvious we should be doing?
There's a bunch of different things that go into
Right.
But we get this question all the time, which is, what can I deduct from my business? And, it's the same thing we've been saying for a while now, which is stuff that's ordinary and necessary and reasonable.
Right.
Those are the things you can deduct for your business.
Sure.
Now, I think what people are really trying to ask is, what are the things I can deduct for business?
What's on the line?
that I'm not supposed to be deducting, right? So we'll give you some of the more non-typical, outside of the box, commonly missed deductions. But I think it's a good practice, like Joe said, to start with the typical things, right? So start with professional expenses. These are paying your accountant, paying your lawyer, getting your certifications for, an industry you're in. If you're a welder, if you're in a union, paying the dues for that union. If you're somebody who is a realtor, then getting your MLS subscriptions and doing all the things that you need to be caught up with the state in terms of your licensing. So all those things obviously are deductible, right? Same thing with office and administrative. Something that people always miss, it's their home office stuff. If you're working out of the home office, and we have a video on the home office and what qualifies and doesn't qualify, make sure you're getting those things. There's a lot of times where things you're already paying for that you didn't realize you also are using for work, like your cloud storage, your cell phone, your Google subscriptions, or your Microsoft subscriptions.
And that was what I was going to bring up, right? We talked about this in a couple episodes before. It's almost imperative at this point, even just for the list that we did so far, right? And we still have a lot more that we're going to dive deeper into. Having a separate card specifically to what is business expense and what is not really helps you mentally make the decision between, okay, is this or could this be business expense or does it not, right? Yeah. Nothing's worse, because I've done it in the past, where you put everything on one card and then you spend the entire month of December highlighting what you think is business expense and what isn't, and then you're submitting it to your accountant for them to review it. Having it on the actual card specifically and saying, oh, you know what? I have to redo my Microsoft 365. Let me switch it from my credit card to my business card, right? I have to get my CE credits for my license, so I need to pay for those on my business card, not my personal card. Those little details from a habitual standpoint will really help you not miss some of these deductions.
And we have to be honest with ourselves too, right? If you're the type of person who, unlike Joe's at least doing it in December. There are people who are doing this on April 14th, and they're just dumping an Excel file with all of their mixed business and personal expenses, and they're getting me in the worst mood that I'll possibly be in for the entire year, and I'm usually yelling at them when I get that. So save yourself an ear lashing from your accountant and Joe, and instead take everything and put what's business on a business card, and then you can give me the entire file, and we don't have to go through the headache of, we can't write off your shopping trip to Chanel.
It's funny because working in the accounting capacity at this point and being around it for as long as I have, I don't think most people even put together the fact that you're itemizing everything that was being spent from a business expense.
Yeah.
Like, it's listed out. Here's exactly what I spent. Here's the dollar amount. Here's what it was.
Yeah.
Like, you're not just turning in and saying, I'll spend $15,000 on business, and your accountant's
going,
about
10
you got it, no problem.
Yeah.
Your accountant wants to see, show me how you got to $15,000.
And if I don't want to see it, the IRS definitely wants to see it. So
right. Yeah, and you're not going to sign off on something just for the sake of somebody said, it's 20 grand, don't worry about it, put it in the system.
Yeah.
Because that's the whole point of having a license and make sure you're doing it right. So
exactly.
When you think about the end of the day, and this is helping accountants that might be watching, your accountant wants to have a constructive, itemized list of what all of the expenses were. And if it's on a separate card, it's much easier to bring the entire list at once and say, here's the list of everything that I did.
And in fact, I'll even say, and I shouldn't be saying this, but I'll say this, I would prefer you to occasionally throw the personal expense on your business credit card than you ever take a single time where you use one business expense on a personal credit card. Like, it's much easier for me to identify something that's a personal expense on a business card and pull it out and not give it to you as a deduction than it is for either person to then go to your personal credit cards, your personal bank accounts, and look through every transaction you had to try to find what was business and what wasn't. So do yourself a favor and get that separate card, separate debit card, separate credit card, separate bank account. And even if you don't have your own LLC set up, your own corporation set up, have all of this stuff segmented out and separated to save yourself a headache at the end of the year and lower my fees to you.
Yeah. So we talked about office administration, obviously software subscriptions, cloud, banking fees, all that stuff.
A little bit of
wrapped
tech.
in if you have it. Well, let's talk about professional memberships.
Yeah.
Right. So what specific professional memberships come to mind, or maybe examples of clients that you have that are writing off those memberships that they can use? So
yeah. I mean, well, my AICPA fees, right?
Okay.
My, even if you're doing professional insurance for yourself, if you're doing Toastmasters, to learn how to do better public speaking, these are all things that are deductible because they're helping you with business.
MDRT is a $1 million roundtable is like a group that you put together. So what's a popular one? The 10X.
Yeah.
Is that something that you can use? That's
I
great.
would say,
Cardone. I don't know how. I've never been to one. No offense, Grant. Not that you're going to be watching this. But if his name's Grant, is that his name?
I don't think anything that guy says is real.
But things like that, would that be something that would consider?
I think so, and I think that's a great example. If you wanted something like professional coaching, mentorship, all that stuff would count as deductible.
I mean, you could probably swipe for 4 minutes on your Instagram and find 6 business life coaches that would want to charge you to help you.
No, all of this is predicated also on the business has to be making money. Right?
Yeah, of course.
You can't just
you have it losing year after year, and you have a business coach that's teaching you.
Or you're making
not
a very good coach. Right. Or just making an LLC to take a bunch of expenses to offset your W-2. This isn't going to work.
Right.
But if you're actually generating income, absolutely that would be something that's deductible.
Good move. Marketing, business, and development. Right. So obviously business cards, advertising that you're doing online.
Yes.
Is there a certain amount of advertising that you can or can't do, or the amount of advertising is obviously up to the limit of what you're making? Even sometimes past that, as long as you're not negative.
Yeah, I think it just has to be business decision, right? Like we actually have a story about a client that, his business partner, I was taught about this, and he had actually went to an IRS audit through this and he passed it. So his business partner actually had a very big passion for cars, and he had, he wanted to race the cars and he wanted to build a track car. He had a company that specifically did that, where he built a BMW track car, and it wasn't street legal. It was a full-on racing car.
Right. On a trailer, can only go to the track that way.
Yeah, exactly.
Right.
And he, from their joint company, my client and his business partner, they signed a sponsorship deal with that track car, and that was a deduction from the business. It went to the
advertising on the car.
Correct. It went to the LLC that held the racing car. He had other sponsors as well from some other ventures he was in, and all of that was allowable as expenses from those various entities. It was taxable income to his LLC, but then he spent money on tuning of the car and the track fees and all these other things, and that ended up being almost a wash. So it was a nice, very smart way for him to actually do something that he really wanted to do while also getting advertising out for a bunch of businesses that he was involved in.
Well, and that's where you look at your situation in general and you say, okay, there's obviously the normal things that I'm writing off and I'm deducting, but how creative can we get from an accounting perspective to not only, accomplish the things that I need to accomplish for work, but maybe some of the hobbies that I would like to maybe turn into something longer term. Do they overlap? And if they do overlap, what creative ideas do we have? And that's a good example of one.
The travel stuff too, right? Which we have a whole video on.
Yeah.
So you guys can get a lot of info on that one. Yeah. I think, like I alluded to earlier, when people ask, most people know this and they understand that they can take these deductions, right? It's more of the out of the box stuff, right? It's what else can I take? That's generally the question that people are asking us. And to that answer, we always say, I don't have a list of what else you can take.
It's situational.
It's situational. And it depends on what your ideal scenario is, figuring out ways to make expenses that you have in your life considered business expenses in a legal way that allows you to take these deductions from a business perspective. That's the ultimate optimal situation, right? I think like with all things, it is silly to go and try try to find an expense and take a tax deduction and spend $1 to save 35 cents of taxes.
Right.
You still lost 65 cents. You're better off not taking the expense and keeping the 65 cents and investing the money. So these are things that maybe it isn't something that you're already spending money on and you haven't realized that maybe it's something that can be framed as a business expense, or maybe it is legitimately a business expense and you use this stuff for business, but you haven't thought about writing it off through your business. So, one of those things would be the personal branding stuff, right? So we were talking about earlier with Joe and getting suits or getting a polo that has your branding of your company on it, right? And there are ways to do that in a way that would be considered deductible. The main things are, making sure that those costs are, necessary and reasonable for your business, or if it's protective gear, like let's say you work in a factory and you get a bunch of, protective equipment, obviously that's always going to be deductible. But if you wanted to get some nice polos, having your branding on there, having it visible, wearing it at work, those are things that would allow those deductions.
I try to get a free suit out of soccer.
Yeah, he tried to put it on the inside.
Suit supply or Indochino, you just put your logo on the inside of the jacket, and the conversation was it needs to be on the outside of the jacket, and a suit that'd probably look ridiculous.
Yeah, exactly.
That's out. Getting polos with your company's name on it, getting, a tire that you're going to wear around. It's, that's ways for you to purchase clothes and get deductions for the clothes that you're purchasing, right? You just there's a walking billboard.
Yeah, there's some people who are trying to squeeze every penny, and this is a way you can walk around wearing your company's attire 24/7 if that's a way to you can find to save a couple bucks.
We talked about fitness and wellness memberships, right? So how does my fitness club, and I guess it always ties back to ordinary, necessary, right? How does my fitness club tie into my ability to network, right? Are there specific memberships that you would look like? No one's right now Planet Fitness.
Yeah.
You're going to say what? On the treadmill, I prospect?
Yeah, no, exactly. So I mean, that's where you get into the fringe versus total benefit.
Okay.
Just employee benefits. Fringe benefits are when a benefit is only allowable to certain people in a business, right? So let's say Joe owns his company, has 3 people that work for him, and he gets the company Ferrari, and only Joe's allowed to drive it, and he parks it at home. That's not a company benefit. That is Joe using business money to buy a personal vehicle, and it becomes taxable income to Joe whenever he uses that car, or just in full, to be honest. But there are things that maybe Joe does have for the business. Maybe he has like a really nice coffee machine that he buys for work, right? And all the employees are using this coffee machine. That's obviously a business deduction. The coffee machine's at work. What about gyms? And there's a lot of information you can find out about this, but there's many instances where gyms are deductible as long as the perks associated with using the gym is available to everyone in the office. So if there's, let's say you can make a deal with your local Lifetime Fitness where, you're going to offer a corporate membership to all of your employees, and you have 10 people that work for you, and you're going to say make a deal for $200 a month per person. You pay $2,000 a month for that membership. Everybody gets to use it. Everybody gets to participate in the gym. Say you have 1 employee. As long as everyone's allowed to use it, theoretically, this could be a business deduction. It probably is safer and makes more sense to have it available to multiple people and having multiple people working for you. I think you'll pass an audit a lot easier, but that doesn't mean that a single member company can't have this type of perk.
So if you're the only employee, let's say you own the business and you are the employee. Obviously there's gyms out there. There's Lifetime that's out there. There's these mega clubs in New York that are networking. There's dinner places to go. How would you consider like fitness or wellness compared to actually networking? Or does there need to be a distinction that doesn't need to be?
Yeah, and I think this is like where it goes back to the stiff test stuff, right? It's if you're going there and you're going to the specific gym because it's yielding business, or you have a lot of clients that are going there and you're meeting people and it's available to everybody who works in your office, then I don't think it's an issue.
Okay.
I think if it's just you in your office and you've picked a gym that's, further away than the next door, Retro Fitness, and you decided you're going to go to this really nice gym, I think there's a little bit of responsibility for you to have a conversation with your accountant to see why this is necessary for your business and why this is not a stretch. much.
Well, it's about perspective, right? And that's why having an accountant is very important, because your perspective may be, well, I'm going there and I'm working out and I'm talking to a lot of people. And then your accountant sits down and looks at everything all together and says, yeah, but in reality, you're going there to work out and maybe once in a while you meet someone. That's not going to be deduction from that standpoint. So you got to talk to your accountant and find out.
And I'm not saying no and I'm not saying yes, but I am saying, have a convo, and there's a line of thought here that could be reasonable and allowable. That's one of them, right? Another one's gifts for your clients. This is a big one, because it's not as nice of a deduction as you think it is. Because a lot of people would think, let's say Joe gives me a gift and I give Joe a gift. Does that mean that we can both deduct some nice expensive thing?
No, smart.
Like, no, you can't do that, right? So that's the thing. They've thought of these things, all right? And they've said that the maximum you can write off for client gifts is $25, right? Anything above that is not deductible. You can write the check, you can send it out, but it counts as a non-deductible distribution, still paying profit on the difference. If you do want to, you've probably had this happen to you, go into a bank and they're giving away some, sign up, be a new client, and we'll give you a toaster or something, right? It's a $500 toaster, and you get a 1099 in the mail for $500 at the end of the year. And that's typically the way you're supposed to do this, where if you give your client something above that $25 limit, theoretically, you are supposed to issue them a 1099 in order for you to be able to take the deduction, but that does mean that they then have taxable income on their side. So those are...
Nothing's worse than telling your client,
hey, got you a watch or got you a gift, or I'm bringing you to a game, you pay $1,000 for it, and then they get it added to their tax bill at the end. They're like, what is this? How did this happen?
Yeah, I mean...
but listen, I think a lot of people watch these videos and they think, again, it's about perspective, right? You think, oh, all right, well, I'm going to take my client out to a basketball game. I'm going to take them out to, a soccer game, or I'm going to buy them a nice computer or a nice watch or something like that. And I'm going to go back to my accountant and be like, that $5,000 expense is what I bought my biggest client for, for Christmas. And they're like, okay, well, only $25 of this you can write off.
Yeah, you got a W-9 for them?
Exactly, right? So, but look, that's the worst conversation to have, because you're assuming I got $5,000 in deduction. Meanwhile, it's only $25 unless you send them a tax form, which you probably won't want to do at that point.
Yeah, exactly. Or you're like
texting them. It's like, hey, so bro, where do I send you're gonna get a 1099. What address?
What address works good for you?
So look, these are things that happen in the business world, and you have to be, bring them up, have a rational conversation with your CPA about it. And so maybe this just counts as a distribution, right? Maybe I'm just going to count this as a gift to the client because I don't want them to pay the tax on it. Means that, you don't get the deduction, but if you're really truly giving them a gift, you really are giving it out of your pocket in this point. So those are things that we see where people think that they've kind of outsmarted the system, and sometimes it doesn't work that way. That being said, if you want to give your client something nice, or if you want to give your accountant something nice, take them out to a fancy dinner, because that's deductible.
Yeah, I was going to say, what are some alternatives to doing that?
Yeah, so you got really, the meals are the best. It used to be you could do entertainment as well, right? Pre-2018, pre-Tax Cuts and Jobs Act, you used to be able to write off your Knicks season tickets, which, I wish I'd be able to do. But unfortunately, that has gone away. And you're no longer allowed to write off entertainment. You're not allowed to write off sports games unless in very, very particular situations and circumstances. If you are, for example, hosting a big event and it is in a box and you are inviting people into the box and it's sponsored by work, that counts as entertainment. And as great as it sounds, and it could be like a great way to take a tax deduction, wouldn't theoretically count. Only the food and drinks would be deductible in that scenario. So how do we get around some of that stuff? Well, if you go to a sporting event and let's say you have to close a deal, you have to meet a person there. Somebody says, I'm flying into town. I'm only going to be at this game for one night. And it's an opportunity.
Come meet me.
Meet me here. We have to talk and I'm going to be here. And this is the only place where you can meet me. Then in that case, this sounds like you may be able to take that deduction. There are rules. There are things with the IRS. There's particular circumstances. And I highly encourage you to look those up where you can write off those scenarios, but they're rare and they probably don't apply to you, to be honest.
Right.
Now, outside of that, you can also do some events for clients, right? You can give a, let's say we're going to throw a big party.
Yeah, or what if you do a dinner, like a client dinner?
For sure. Throw a client watch party for a game and do it at a bar and rent out the whole bar and pay for drinks for everyone for the whole night and invite all your clients or invite 2 clients. That counts as a deduction. That's a smarter and better way to take those deductions right now. Charitable donations on behalf of people. I think those are cop-outs as gifts. But that is a way for you to take the tax deduction and give something nice to your client, or at least
the charity that your client wants. Yeah. It sounds like you're giving a donation and you're making it seem like it's from your client, but that'll count. That's a good idea. Yeah. Again, I mean, there's a lot of other deduction opportunities that come from here. Take some of these ideas and obviously think about that as you're planning for your business year, whether it's the rest of this year or obviously 2026.
I'll leave you with one thing, actually. So what I would say is, if you had to really think about what are the things that are deductible to me, there's no list that exists for that of, hey, use these things as deductions. It doesn't work that way. What you should be doing is, which is a great tactic for everyone to do, is you should be taking a list of everything you spend money on normally, whether it's through business or through your personal life. Categorize it, break down how much you're spending per year on those things. Go sit with your accountant and tell them, this is where I'm spending my money. How can I make this deductible? Is any of this stuff deductible through my business? That's the right way to approach this. It's not asking for a list and then trying to shoehorn a way to make these things work. It's having this
through your daily life.
Yeah.
Yeah. Being as tax efficient as I can with how I'm spending my money.
Yes, correct.
All right. Get to work.
All right.
We look forward to seeing you guys
more work for you guys
on the next video. Thank you. See ya.